Hello everyone, my name is Mr. Rader, and in this economics video, we will examine risk and investment as it applies to the wealth management case study for day 20. And it's really intended to help students really think through possible risks and rewards for particular kinds of investments. So in the introduction model, your teacher most likely had you look at this definition for risk as the effect of uncertainty on objectives. And perhaps your teacher asked you to compare that definition with your own. One way that I like to conceptualize the idea of risk is thinking about it through a scenario. So, for example, if my objective is to go to my favorite ice cream store to buy a pint of ice cream before it closes in an hour, there are plenty of uncertainties that do not matter to my objective. How GameStop stocks are performing in the stock market, whether Congress will pass a particular piece of legislation, or whether my parents had a satisfying lunch. But whether the bus that can get me to the ice cream store before it closes in an hour gets to my bus stop on time is an uncertainty that affects my objective. In other words, the timeliness of the bus is a risk. So when I think through this concept of risk management, one of the things that I like to usually do is consider what are the possible risks of a particular decision and what are the corresponding rewards. This can be visualized in a risk reward pyramid where the higher the risk, usually the higher the reward, and the lower the risk, usually the lower the reward. And this can apply to our investments as well. For instance, some of the highest risk, highest rewards investments could be stocks or collectibles or cryptocurrencies, whereas some of our lowest risks and lowest returns investments can include things like savings bonds and savings accounts from the bank. So in this lesson, you will be asked to read through the task of the wealth management case study and common investment strategies. In this video, we're only going to look through the common investment strategies, and in the next video, we'll take a deeper dive into the wealth management case study. So in this document for common investment strategies, what you'll need to do is weigh the various risks and rewards for a variety of different investment strategies, including bonds, mutual funds, stocks, bank accounts, and collectibles. And my focus here will be simply just on the mutual funds, just to keep things short. So when we consider mutual funds, we'll want to read through its definition, the risk, which in this case can vary depending on the kind of mutual fund. There are some mutual funds that invest in what we call index funds, or they invest in basically everything. So, for example, one of the largest index funds in our country is an S&P 500 index fund, which invests in the 500 companies that make up the S&P index. One of the pros that is diversified, so you get exposure to a variety of industries, and you can select from various different risk levels. However, the return is not guaranteed. The market does go up and the market does go down. So you may lose money on your investment if you buy high and you sell low. And it can be subject to expensive management fees. So one thing I just wanted to show you is if you are interested in buying mutual funds and you're 18 or older and can open up a brokerage account, if I Google companies to buy mutual funds, some of the major companies that I can go to include First Trade, Ally Invest, Vanguard, Fidelity, Merrill Edge, and Charles Schwab. And they each offer different options for individual investors. So with that, one of the things that I want to say to conclude the video is that when you're weighing your different options, you want to again consider the risks and the rewards, right? So remember, mutual funds and stocks are going to be relatively high rewards, but also very high risk. By contrast, bank accounts are going to be relatively low risk, but they're also going to be relatively low reward. All right, everybody, stay tuned for our next installment where we look into the wealth management case study. Have a nice day. Take care.